Hey, welcome back. Today we're covering 10 foundational financial tips that apply to virtually everyone, regardless of how much you earn, where you are in life, or what your financial goals look like. These aren't complicated concepts, but they're the ones that consistently make the biggest difference between people who get ahead financially and people who feel stuck. Let's go through all 10. Tip 1: get paid what you're worth and spend less than you earn. These are two sides of the same coin, and both matter. On the income side, do you actually know what your skills and experience are worth in the current market? A lot of people assume they're being paid fairly without ever checking. Take the time to evaluate your role, your contributions, and what comparable positions pay both inside and outside your company. Being underpaid by even $1,000 a year adds up to tens of thousands of dollars over the course of a career. Knowing your value is the first step to being compensated for it. On the spending side, no matter what you earn, you won't get ahead if you consistently spend more than you bring in. And often, finding small ways to spend less across multiple categories is more achievable than dramatically increasing your income overnight. You don't always have to make big sacrifices. Small, consistent reductions add up over time. Tip 2: stick to a budget. We've covered budgeting in depth in other videos, but the core point bears repeating here. If you don't track where your money is going, you can't make informed decisions about how to change it. A budget gives you that visibility. It lets you set spending limits, identify where you're overspending, and make deliberate choices about how your money is allocated. Whether you earn a modest income or a very high one, a budget is how you stay in control of your finances rather than wondering at the end of the month where everything went. Tip 3: pay off your credit card debt. Credit card debt is one of the single biggest obstacles to financial progress. It's easy to underestimate because the individual purchases feel small, but the interest accumulates month after month, and over time you end up paying far more for things than if you'd simply paid cash. If you're carrying balances, make paying them off a genuine priority. Not just making minimum payments, actually eliminating the balance. Every dollar of credit card debt you clear frees up cash flow, reduces the interest you're paying, and gives you more room to work toward every other financial goal. Tip 4: contribute to a retirement plan. If your employer offers a 401k or a similar retirement savings program, contribute to it, especially if there's an employer match. An employer match is essentially free money added to your retirement savings on top of what you contribute. Not taking advantage of it is leaving a real financial benefit on the table. If your employer doesn't offer a retirement plan, open an individual retirement account, an IRA. There are different types with different tax advantages, and the right choice depends on your situation. The key is to start contributing something, even if it's a modest amount. Time is one of the most powerful factors in retirement savings, and starting early gives your money the longest runway to grow. Tip 5: have a savings plan and pay yourself first. The most reliable way to build savings is to treat it like a non-negotiable expense, rather than whatever is left over at the end of the month. If you wait to see what's left after all your other bills are paid, the answer is usually not much. Instead, commit to setting aside a percentage of your income. A useful starting point is at least 5% before you pay anything else. Better yet, automate it. Have the money transferred directly from your paycheck into a separate savings account so it never sits in your checking account where it can be spent. Over time, you won't miss it, and it will accumulate into something meaningful. Tip 6: invest. Once you're contributing to a retirement plan and building a savings cushion, consider putting additional money to work through investing. This could mean adding to a brokerage account, buying index funds, or exploring other investment vehicles depending on your goals and risk tolerance. Investing allows your money to grow at a rate that outpaces inflation over time, which savings accounts alone typically don't achieve. You don't need to start with a large amount. Consistent contributions to a diversified investment portfolio over time is the approach that builds real wealth for most people. Tip 7: maximize your employment benefits. Your job likely offers more financial value than just your salary. Benefits like employer retirement contributions, flexible spending accounts for healthcare or childcare costs, health and dental insurance, life insurance, tuition reimbursement, and other programs can add up to significant money each year. Take the time to fully understand what benefits are available to you and make sure you're enrolled in the ones that make sense for your situation. Flexible spending accounts, for example, let you use pre-tax dollars for eligible expenses, which is essentially a discount on those costs. These are benefits you've earned as part of your compensation, and not using them means leaving money behind. Tip 8. Review your insurance coverage. Insurance is one of those areas where it's easy to be either underinsured or overinsured, and both situations cost you money. On the overinsured side, some people pay too much for life insurance by purchasing whole life policies when a simpler and more affordable term life policy would meet their needs. Others buy life insurance when they don't have dependents, which may not be necessary at all. Still others add insurance onto loans and purchases where it may not provide meaningful value. On the underinsured side, not having adequate coverage for your dependents or your income in the event of death or disability can leave your family in a very vulnerable position. At least once a year, take stock of your coverage across all types of insurance: life, health, auto, disability, homeowners, or renters, and ask whether what you have still makes sense for your current situation. Shopping for better rates is also worth doing periodically. Tip 9. Update your will. This one gets overlooked more than almost any other financial task. Studies have shown that only about a third of Americans have a will in place. If you have dependents, children, aging parents, anyone who relies on you, a will is not optional. It's how you ensure that your assets go where you intend and that your wishes are respected. The good news is that for many people, creating a basic will isn't as complicated or expensive as it might seem. There are software tools that walk you through the process for situations that aren't overly complex. If your situation is more involved, significant assets, blended family, business interests, working with an estate attorney is the right call. A will isn't something you write once and forget. Review it whenever your life circumstances change: marriage, divorce, the birth of a child, a significant change in assets. Tip 10. Keep good records. This is the kind of tip that feels unimportant until tax season arrives and you're scrambling to find receipts and documentation. Good record keeping throughout the year means you're much more likely to claim every tax deduction and credit you're entitled to, and potentially save real money as a result. It also means you have clear documentation of your financial life, which is useful for everything from disputing an error to applying for a loan. Set up a simple system, digital folders, a filing cabinet, whatever works for you, and use it consistently throughout the year. The small habit of filing things as they come in saves enormous time and stress later. Let's wrap it up with a quick recap of all 10. 1. Know your worth and earn it, and spend less than you bring in. 2. Stick to a budget so you always know where your money is going. 3. Pay off credit card debt and don't let it accumulate. 4. Contribute to a retirement plan, especially if there's an employer match. 5. Pay yourself first with an automated savings plan. 6. Invest beyond your retirement account when you're able. 7. Maximize every employment benefit available to you. 8. Review your insurance to make sure you have the right coverage at the best price. 9. Create and maintain a will, especially if you have dependents. 10. Keep good financial records throughout the year. You don't have to tackle all 10 at once. Pick 1 or 2 that feel most urgent for your situation right now, work on those until they're in place, then move to the next. Over time, building all 10 into your financial life creates a foundation that's genuinely solid. If this video was helpful, please give it a like and subscribe for more practical financial content. Drop a comment below. Which of these 10 do you feel strongest about, and which one do you most need to work on? I'd love to hear from you. Thanks for watching. I'll see you in the next one.